here. First of all, I'd like to say welcome to our new second quarter review. We do try to do this, of course, once every quarter to bring you up to speed as to where we're going and some of the new services that we're offering. So with that, I'm sitting here in Virginia Beach with my daughter, Megan Cahoon, who also works for me. She's also an investment advisor and helps out with TSP tips and numerous other things that we work with within Wiser Investment Services. So without any further ado, I'll kick it on, kick this off. What we do have is that we will take a question and answer period at the end, but as I'm going through this presentation, it'll probably take between 20 and 30 minutes. Go ahead and enter your questions if you do have any and put them in the chat, and we'll go ahead and answer them initially in the Q&A, and then we'll follow that up. We'll unmute everybody and then go to any voice questions that you might want to know. You will get slides of these presentation slides. And so if you have signed up and you have your email address in there, expect to receive them from Justin, who does all the administration and those type of services for Wiser for TSP tips. Again, I'm Roy Wiser from Wiser Investment Services, and we are the ones that actually provide the advice. Work together with Justin, and it's a team effort along with Megan. So without any further ado, I'll head down to the slides. And one thing that I always would like to start out with is, well, how do you figure out your investment strategy? And we opened up Wiser Investment Services in 1993, and I've been doing this for a long time. But some of the basic tools that we use are moving averages and candlestick reversals. And if you go to YouTube, you'll probably see some of the strategies in much higher detail. But that determines the moving averages is when to be in the market. When does it probabilities high to be in there? And then the second one, we use a performance ranking and composite scores. Performance rankings are kind of unique because it's weighted average, and we look at 4 different periods: 1 month return, 3 month, 6 month, and 12 months. And then we weight them, placing a higher weight on the shortest period, which is 1 month, sum them up, sort them. And that's where we want to go ahead and be when the market conditions are right. And what you'll see on some of the graphs too is that we at times increase our cash allocations. And at those times, when you see the charts of the funds, you'll see a flat area there. And that's when we kind of take risk off the table and kind of stair step ourselves up until we wait for the next bullish run to start. So a good strategy, we've been using it, and it works pretty well over the ages. So here's what the TSP tips, here's what the TSP funds have been doing over the past first 6 months of the year. It started out in January. We kicked off the year. It looked pretty good. You can see the different funds there. The legend is on the right side. But you can see once we finished up the third quarter, right around the first week of April, that's when tariffs were announced. And the market really sold off at that period of time. And you can see there the flat line just above $10,000. That's the G fund. The line right above that, the brownish one that's right around 10,000, that's the F fund. And then you have the international fund, which is blue. And that took a little bit of a dip there in those mid-April timeframe, and along with the gray line being the C fund and then the S fund down there at the bottom. But you can see how they've clawed their way back with the with the I fund having the best performance year to date, and we'll have a chart on that. But that's it. Now, what I want to do here is overlay the aggressive, moderate, and conservative models that we have. And again, I want you to keep in mind that drop that occurred in April, the beginning of April, and you'll see that stair step event that I was talking about. So you can see there how we add in the 3 funds, and it's kind of convoluted. It kind of converged there at the very end, but we're pretty much matching the S&P performance with the 3 different models. However, notice in that mid-September that I was talking about, where we have flatlined for about a 2 to 3 week period and move monies in 100% in the G fund in order to help ourselves take risk off the table and get out of a volatile situation. It's a hard part you have with the market. You never know how far down it's going to go, and it's always avoid large losses. Okay, so we've laid that across, and now we're going to have another few slides that will go through the different periods specifically. Okay, here we are taking a look at it from the first quarter through the second quarter. First quarter being blue, noted at the bottom under the largest loss, and then the second quarter being the let me get my laser pointer going here. Down here, the first quarter in blue, and the second quarter performance in the brownish color. So you can see here that the first half of the first quarter of the year, a lot of the C, S, and I funds, of course, the I fund had been performing the best, but we saw that drop off that was attributable as we kind of worked our way through those first couple months of the year. But then it sold off significant, like I said, in the mid-April. So what happened is then the C, S, and the I funds all came back from those lows, while meanwhile the aggressive, moderate, and conservatives for that quarter did have a little bit less because we were in that cash position and then we moved back in. So that's kind of the how it looked quarter by quarter for each of the funds. And you can see here in the first quarter, you had the 8.94% having the largest loss. The other thing that you note is that we do also have the MFW tips there, and you can see that. I'll talk more about that separately, but that had a pretty good performance over the last or over the first 2 quarters for this month. Of course, it was down the most. It was down 8% during the first half, the quarter, but it went up substantially during the second quarter. Okay, so quarter by quarter. So let's look at it again, how we combine those two together and put them together and figure out where we are now. Or these are all through the end of 30 June. So you can see here the I fund again. We looked at that. The performance is almost 18%. You can see here the CS and I funds. You can see here the different models that we had, and then you can also see MFW windows. MF mutual fund windows, and that's right at around the 13%. I think it is right about in that area right there. So from a yearly perspective, that's yearly 6 months to date through the end of June. That's how we're looking. Okay, so a little bit now on that strategy that I alluded to in the first slide, the tip strategy. So you can see there, this is week by week for the second quarter. And this is what we do on a weekly basis as we do our weekly summaries. All this analysis is done before I send out that Saturday newsletter at around for Saturday publishing. But at the very bottom of the screen, you can see there on the far left of the screen, you can see the score. That's a composite score. It has 10 different indicators that we look at. And again, there's a different score for each of them. When it's in most bullish, it's at 100. And when it's at 0, it's extremely bearish, excuse me. So again, it goes from the beginning of the quarter at the bottom and then all the way through last Friday, 7-Eleven day. So you can see here in those first few weeks of April at the bottom for the CS and I fund, how the scores drop significantly. And I'll just talk about the aggressive model, which is the blue cells, but you can also see the different models that we have over here with the moderate and also the conservative. Okay. Now, of course, it matches up. You look at the different funds, and you kind of go through and you say, okay, right around 411, we were at a low point. That was that extremely low point that I showed you. And then all of a sudden, the I fund started to improve its composite score, going from 25 to 70 to 100. And you can see corresponding in that model, we moved from 0 to 65 to 100. And it maintained that way for about the next till the second week of June. Mid-June, we also had a sell-off there. So you can see how it dipped a little bit with the composite scores, but notice everything is looking really good across the board here. But we had that little sell-off. We took some money off the table in the aggressive fund, moved 30% from the I fund over to the G fund. And then once it came back again, we went 100% back into the I fund. So those are the composite scores. And I hope that everybody's seen with our services now, we've changed it. Before, you would have to select your respective model, and you had to go with that. But now we've changed it so that everyone can see aggressive, moderate, and conservative models on both the web page and your app. Not to neglect the moderate and the conservative, but you can see here, if you look for each of those, you can see the cash, the G fund, how much we had in that, and also as it looks at it in the conservative. But we plugged this in and it really works pretty good. We found it to be very successful as we deal with our strategy with that. So that's the composite side, the composite score. But the other one that's really pretty interesting that you can have here, this is how we look at this on a weekly basis, okay? Kind of in the opposite direction from the previous slide. But you can see here how these are the daily prices. We go in every day and we look at them. This is just for the last 6 weeks, not the whole 90 days, 3 months. So, but you can see here, the blue signifies when the I fund hit a new 52-week or all-time record high. And as it started out June, it started popping, boom. You can see there the very first week of June, or day of June, excuse me. It hit a new high, and then we had a nice run of about 6 or so new highs. The prices of the C and the S funds kept on climbing, and then you could see right around the last week of June how the C and the I funds, their prices, they were started to hit both new records at the same time. C fund finally catching up. And then you can see how it has been recently. So that's the left side of the screen with blue signifying new record highs. Now, on the right side, during that same 6-week period, you can see on the blue. Well, let's start out. You can see here how the C fund, or excuse me, on the very first week, the blue had the highest performance ranking. Then the C fund was second in green, followed by the S fund in the light brown color, sandy color. And that was pretty consistent as we moved on down until July 4th, basically, July 4th weekend. And you could see how while the I fund remained in the lead position, you can see how the S fund took over the second runner-up position, and then the C fund followed the drop down into third position of the 3 equities. But the other thing that we're seeing here very recently is that there used to be a little bit more of a gap between the 2 funds, leader and the runner-up. And as we're seeing here very much, especially at the end of last week, these funds were all pretty close to each other. And usually for the aggressive fund, we'll put it into the fund that has the highest performance ranking, and we've kept it there. But with price action this week, there could be a move, and you might see the S fund move above the blue I fund with performance ranking. If it does that, then yes, we will go back and we will do a allocation for one of our allocations for July. So that's how we use our strategy, composite scores, and also where to be in the market. This is a very good tool, and you'll see that on some of the other things that we do. So with that, we cover composite scores, performance rankings, how we've done. Let's talk about mutual fund tips. This is a new service that we have, and it focuses on two funds. I'll go into each of them, but this is what I pulled down from my mutual fund window access portfolio. And back in August 15th, I put in 35,000. I've done the back testing on this going back many years, and you can see how that's the initial value. And using a combination, usually with the Bitcoin fund, Pro Funds Bitcoin fund, and also the Pro Funds Ultra NASDAQ 100, which is a leveraged 2-to-1 fund that matches the NASDAQ 100. Those are the two funds that we follow. But it's had a nice performance going from there to now. Last Friday, when we did this, 46,500. You can see how the date when we first invested, we started out on April 21st, but with 100% in the cash fund, their money market fund, zero. And then the day we got a signal and we moved initially from the Bitcoin fund. So we moved 100% from the cash to Bitcoin. And then in mid-April, the NASDAQ 100 fund gave us a buy. So we moved 50% over there. And then Bitcoin fell out. We sold it, moved that into cash, kept 50% over there. And just recently on Thursday, we had a buy signal on it on Bitcoin and moved that 50% from cash into Bitcoin. And what we do also is that when we send out our weekly newsletters, we take a look at the historical data. And this is from when we've been tracking it. And I'll talk to Ultra NASDAQ 100 first. We've had 16 trades. This is when we started it on the end of April in 2019. We've had 16 trade cycles, buy, sells. And then we like to look at this. The average holding period over those 16 periods has been 69 days. And as of last Friday, we're at 59 days, 86% of the way through that cycle. And that's important to look at this number because you can kind of say, okay, am I going to be running out of steam here? And also when you have a point that you say, instead of me selling 50% out of BTCFS, Bitcoin, and put it into cash, do I want to go ahead and increase the UOPIX to 100%? And again, that's dependent upon how long you are into that cycle. Similar, we haven't tracked the Bitcoin as much, didn't have as much data, but since 2023, there's been 9 cycles, average holding period, 48 days. And we bought it on the 10th. So Friday, June 11th, we only are 1 day into the cycle for 2%. Okay, so let's look at those two individual funds. Now, here's the NASDAQ 100 fund. I mentioned that we bought it on 5/13 at 109.55. And that specifically is this point when we we were in cash over here, and then we look at it and we purchased it at this point over here at 109.55. And we've had questions before. Well, how do you determine when you're going to sell it? We use a series of sell stops. So if it hits below a certain level, let's say, then we will go ahead and minimize our loss and get out of it. But usually it takes about 3 to 4 weeks, let's say, for that sell stop to keep moving up to where it makes the break-even point and then increase above that for profits. So we've held UOPIX now for about 2 months. And the initial stop was over here. When we bought it, it was 90.61. And then we ratcheted it up once, twice, 3, 4, 5. Now we're at the break even. And now we're going up. So where the sell price is 116.58. Okay. And down here also, this was the price not to sell it. We haven't sold it yet. It doesn't get color coded, but that's the price that it was at on June 11th, July 11th, last Friday, for a gain of this much, about 14% above the 110 where we bought it. Similar, this is what we had with Bitcoin. This is directly from my transaction on the mutual fund window. And in the beginning of the year, we had one profitable trade cycle between April and the end of June about, and made 6.11% on that. And April to June, April 22nd to mid-June was this area in here where we made some money on it about that time frame in here when it was sloping up. Now we got out of it, moved into cash, but then we got a buy signal with it on Wednesday, July 10th. I mean, 9th. We put out an alert, bought it on the 10th at 31.06. And then it took a nice pop. I was pleased to see that on Friday for a 4% gain in one day, which was nice. And you can see over here, we also have the current stop set at 30.56. And you can see that's about $1.50 below this price that we bought it at. So about 5% below that. And again, we ratchet up just like we did on the other fund. And you can see here the posting date, we did it, and then how many dollars were in there. Okay, so that's the two major ones that we use with TSP tips and mutual fund window tips. But what I like to do now is that we've also went and took a look at some of our aggressive strategies that we use. And this is for people that are TSP subscribers or could use it, but it's not available within the TSP funds. This is a very volatile strategy. It's best used in retirement accounts because of the fact that you don't want to have to do all the paperwork at the end of the year in order to document all the individual trades. And we call it Schwab tips, is because of the fact that we look at it, we keep this portfolio using Schwab because we feel they're one of the best brokerage houses that you could have. Of course, you could use this with Fidelity, some of the other brokerages, Robinhood. But any brokerage can allow you to do this. And basically, it's a series of using that stair step effect with buy stops and sell stops. I was talking previously in the mutual fund window about the sell stops. But we actually we have about 25 stocks in there and exchange traded funds. And a lot of them are a little bit different. You'll notice in this name over here, for PTIR, it's the third one down. That's like NASDAQ, Ultra NASDAQ 100. The NASDAQ 100, it has a 2-to-1 ratio with the NASDAQ 100. So this one is a 2-to-1 ratio also, but it's based upon the underlying stock PLTR, and I'll get more into that. But you can see here just a mix of some of the different funds that we copy. Not included on here, this is the top 20, just so people know, number 21 and 22, we're currently covered 22. TSLL, Tesla, the 2-to-1 ratio leverage fund ETF there, that's in last place. And this is how we've done from the beginning of the year. I send this out, a free copy, to about 25 people. And if you'd like to get on the distribution list, just go ahead and send me a email at Roy@Wiser Investments. You have it right there, and we'll get you on the distro list and start sending it to you. This requires you to daily monitor this, and we try to send it out by 7:30 in the morning, so that you have at least 2 hours to go ahead and enter these trades on a daily basis. Green are the ones that we currently own in the bright green. And then when each day comes around, if there are any changes with that ratcheting up a price with the sell stops, you'll see it right here. And all you have to do is go to that one item and go ahead and change it. I just did it for tomorrow. We closed at 4 o'clock, so I left the house about 4:30, and I had 15 minutes to do it, and 8 different new cell stops, and just go in there. It takes about a minute a piece in order to do that once you get proficient on it. And again, we try to make it easy so you don't have to go through everything and see what changed. We just highlight the ones in yellow. And this was the performance from this year. Um, Today was a good day. Uh, so it's gone. Uh, we've had a nice change. Started out with about $529,000 or so. Currently is that gain of about 106K, 20% rate of return this year. And then this was today's performance. Again, using these green highlights funds, or excuse, stocks and electronic exchange traded funds, had a nice gain there. And this is what the account value is as of 1600 this afternoon. So what are the two? Well, let me go back one. We'll look at the first three, just the top three. I have individual charts we'll go through very quickly. I do want to say on the left side over here, before we leave there, that's that performance ranking again that we use in order to sort it based upon the high flying stocks that have the best performing ranking. The other thing we do is that we will go ahead and instead of, if we want to purchase up to 10 stocks, we will not put 10% into each of those 10. We will overweight the top ones so that you might have 20% in that one stock over here. Okay. But we'll look at the top three just so you can get an idea. And again, if you would like to get on the distro list for this, this will be a forthcoming. Just send it to us. We'll send it to you, and then we're going to add this into our services probably in 2026. Okay, CoreWeave. That's a new fund. I mean, a new stock AI that just came on board. It's very new. It just got not much data on it, but you can see here the price that it went. It went from very low price and soared all the way up to about the 200 plus range. And you can see how this looks. Another one. So I kept on hearing about it on CNBC, and I've seen it fall off. And you notice how this middle blue line is falling off also. It doesn't meet all of our buy criteria because there are other things that we do with moving averages, and that's in a watch phase that we're looking. But we're waiting for that next pop, maybe something over here where it pops above the red, and then we get back in. Now, second one, Robinhood. I mentioned that real quick as another broker. We currently own that. This is when we purchased it at the end of June 24th, so about 3 weeks ago. Bought it at around 80, and the current stop, I checked it. This is today's stop, but it'll be at 100. So about a 20-point gain over 80, so about a 25% gain on that one. And again, we ratchet this up on a daily basis, and that's why it requires your interaction. The other one that talks about the weighting at times, this is Palantir. This is the 2-to-1 ratio Palantir. This just had a 5-to-1, a 15-to-1 stock split. So these prices that we bought at the beginning of the year are not applicable in this graph, but the actual prices are. But you can see here, what we did is that we've traded this a total of 9 cycles. And the gain rate is 4 out of 9, which means we've won 44% of the time. But like I mentioned, Palantir is up there. And what we do is that you'll see, because we put more money in there, you can have some nice gains as it works. But the average gain over here for those 4 has been 30%, let's say. H loss was only 10%. So you can see the overall gain, our total cost basis for those 9 purchases was 904K and 966, so another 62,000 in gains. This is the high point that we made. One of the trades that was at this point, it went from 136 to 276. And what we did is we, over here at the bottom next to FIFO, it mentions that this was the cost basis that we had. We put in a $90,000 trade there, and it went up to 183 for a $93,000 profit, which was nice. And this is that beginning of the year over there. So that's just what I wanted to go over with you tonight, a little bit of the review, the strategy, how mutual fund windows is working. I would say on average now, we're given a little bit of runtime. It usually adds right about between 1.5% and 2% to your returns over and above what your model is. And with that, I'd like to close it out and go through some questions. So Megan, if you could please let me know what you have in chat.
With both the TSP and mutual fund window and only 2 trades per month minus the G fund additions, how do we know when to trade if more than 2 recommendations are made in a month?
Well, okay. Well, I think we need to look at this. The policy is within the TSP, the mutual funds, the ones that you're most familiar with, GFCSI, you're allowed 2 transactions usually per month to invest new investment mixes. When you initially set up your mutual fund window, I put in $35,000, let's say. I moved it from the TSP, opened up a new mutual fund window, and that initial move from TSP to mutual fund window accounted as one of the 2 exchanges. So once you have the mutual fund window established, that account, that does not count anymore towards your TSP tips or TSP reallocations. It's totally separate, firewalled, and within mutual fund window, there is a $28 transaction fee for each type of trade that you make. And so we're aware of that. And that's why we always try to keep it so that that period, that average cycle, it occurs, maybe you'd have 2 to 3 cycles, let's say, for UOPIX and another 3 or 4 for Bitcoin. And so I hope I answered your question with that.
With Schwab tips, one of the subscribers was having an issue with Gmail getting them delivered in time. So just to give you a heads up.
Yeah, I think there was one person that had a difficulty with that. I think that it might have had something to deal with. I think they were in overseas, but we squared it away. We got a good, we changed the email provider. He gave me a new email address, and that seems to be working pretty good now. Okay, any furthers? Okay, so let's go open mic and see what we have.